Hello, this is Mike with NetPicks.com and the Options Mastery Program. This is the midweek recap for Wednesday, October 14. So looking at the markets here this week, everything is really all about earnings. Earnings really kick into high gear here this week. We've already had a number of big market movers release those earnings already this week, and now it's all about the financials. The financials are out. A lot of the big names that we track, at least, are out tomorrow before the market opens. I'm thinking specifically of Citigroup and Goldman Sachs. So we'll keep an eye on those. Those will really give us the catalyst for how we're going to end the week market wide. So we also had Netflix out after the close today. Netflix got hit pretty hard immediately after the close, right when earnings were released. They did recover some in the after hours, still down after the earnings are released. So we'll see how the market reacts to that here tomorrow. I'm expecting continued volatility. It's kind of been a messy market here the last couple of days, and we'll take a look at some key levels that we'll want to watch here over the next couple of days. So after the big rally that we've seen really over the past 10 days or so, I mean, we've seen a pretty incredible run to the upside, and we've talked about that in some of the previous videos that we have posted. So when we came into this week, we knew that we were approaching some pretty strong areas of resistance. This is a daily chart of the SPY. And on the S&P, you can see that we did rally right up to some pretty key resistance levels. So I'm looking at the dotted blue line there, the solid blue line. Those are areas that I have been tracking here so far this week. Those happen to be, the solid blue line there is the 89 exponential moving average. The other one there is the 100 period moving average, the exponential moving average. So we found resistance at those levels. We have since started to pull back, just really the past couple of days. We have seen some selling pressure kick in, nothing too terrible just yet. And I'll talk about a few reasons why that is in just a second. So if we do continue to sell off, notice that we are right at some key areas of support. Okay, we've got those yellow dotted lines and the solid line there. Those happen to be the 50 period simple moving average and the 50 period exponential moving average. Those are areas of support. We also have the 8 period exponential moving average right on top of that level as well. So I'm looking there at 199. I mean, that's going to be a pretty strong area of support that I'll be tracking into tomorrow. If that level does break, our next areas of support will be all the way down at these 20 period moving averages down below. So we're really at a make or break zone here. I mean, we could go either way. It feels weak. However, when I take a look at some of the internals and we start to take a look under the hood a little bit of this market, I could very well see things reverse right back to the upside. So, does it sound like I'm flip-flopping there? Well, when you take a look at the market as a whole, when we start to talk about some of the internals and the volume numbers and just all of the news that we have out the rest of the week, we can look at all technicals all we want, but when we start to talk about some big earnings numbers that are out, it can be a tricky market to predict. So the way that I'm playing, and I've talked about this here lately, I do not believe the lows are in yet. I don't believe that we're going to rally right back up to the highs without at least testing those August lows. Okay, now I'm not saying that's going to happen anytime soon, but we were definitely due for a pullback after pretty much 8, 9, 10 days in a row to the upside. So the selling pressure, I mentioned that it's nothing too terrible yet, and what I'm looking at there is the volume numbers. We really haven't seen a big spike in volume yet. We haven't seen any type of panic selling yet. It's pretty routine. It's pretty much routine selling, a really routine pullback to the downside. So if we start to see this volume pick up, okay, if we start to see some spikes like we saw back here or back here, that kind of changes the story a little bit. But right now, just a healthy pullback after some really nice gains the last couple of weeks. So again, 199.00, that's a key area of support that I'll be watching tomorrow, and then down into the 197.50 and 196 areas. Those will be areas of support below us. And then, of course, up above us, we've got that 202 level. That's pretty strong resistance. That's right where we stalled out here going into last week. So if I take a look at some of the other major market index products, let's take a look at the QQQs. Notice, I mean, you can't even see price action here, right? I mean, we are stuck right in the middle of this cluster of moving averages between 105 and 106. Okay, so this is what we tend to call our coiled spring pattern. We talk about this in our options mastery program. When you start to see price action get stuck inside of these moving averages, it's like a spring that just keeps getting coiled tighter and tighter. And when that pops, we're going to get a big move. We just don't know in which direction that's going to be. I'd rather see it move to the downside, for the sake of my own trading, because I know what happens when the markets move lower. Volumes spike, volatility spikes, all good things when you're an options trader. Just it really opens up our playbook when we see those things happen. So I'll be watching 106, actually 107 on the upside, and then 105 on the downside. Let's see which one of those levels breaks first. And again, we've got some catalysts here the next couple of weeks with all the big tech names, all the big NASDAQ names out with earnings. So those are some areas that I'll be watching over the next couple of days. The Dow was really the weak name for most of today. We had Walmart out with some pretty nasty earnings numbers. So that was a big cause of the weakness in the Dow. We did stall out right up above those moving averages, the ones that we talked about earlier, those 89 and 100 period exponential moving averages. Those are areas of resistance up above us. And now as we continue to sell off here, we are testing that purple line. That happens to be our 8-period exponential moving average. And then next areas below that will be our 50-period moving averages, right around that 167.50 level down to 167 even. So those will be areas of support to watch over the next couple days. Again, nothing alarming on the volume side of things, no panic selling at all. So let's see what takes place. I mean, the catalysts tomorrow are really going to be the financials before the open. Okay, so if you want to know what's going to happen pre-market, or what's going to happen, are we going to see a big gap higher or lower at the open, look at the pre-market action in Citigroup and Goldman Sachs tomorrow, and you'll have a pretty good idea, of where we're headed. I mean, the financials are such a big market mover, and we've got to watch them closely here over the next couple of days. Let's take a look at some of the individual charts here next. So we have closed out of a number of the trades that we talked about over the weekend in our weekend recap video. We mentioned that we had a number of trades that were in progress. Let's take a look at some of those. Our trade on gold, this is GLD, it's the gold ETF. We just closed out of this one here today for a full profit. We were in some long call options, which worked out great. Wasn't the quickest move. I mean, we had to be a little bit patient here with a little bit of chop here initially, but we did see a big move to the upside on gold. So I was talking to a customer early this morning before the market opened, and we were looking at a very mixed market in the futures, but we saw that gold was up, and we saw a pretty significant spike in gold during the pre-market. So I mentioned to him, I said, watch the gold market. I mean, there's a red flag here. There's a warning signal with what we're seeing in gold. There's a very good chance that we do see some selling pressure at some point today, and that's exactly what happened. So we did get that move higher. We did close out of that trade. Really nice move to the upside. I'll recap the specific numbers on that in our weekend recap as far as profit goes. So nice trade on gold, and we are now flat. One of the airlines that I track closely, I've traded this one now for most of this year with some pretty decent success. It's not always the most active product in the world, but AAL, this is American Airlines. We just closed out of a really nice winning trade on the upside. That trade was closed out Monday morning, so really nice move there. We do have earnings coming out on the 23rd, so I mean, we're right up against that deadline there as far as taking new trades before the earnings come out. So I'll probably stay flat here until the earnings do come out on the 23rd, and it's always easier to sit on hands when you're coming off of a full winner to the upside. So nice move there on American Airlines. The index products, we talked about a couple of these over the weekend also. SPY, we had a long trade going from late last week. We came in on Monday. We did get wiggled out. We did not hit full profit. Here's the nice part about the way the system is designed though. Once we started to approach that second target, we got halfway in between the first and second target, we moved our stop up. We initiated a trailing stop, and that's where we were taken out. We were taken out right around our first target. So did we hit full target? No. But we did pull out a small profit, so no harm done. And now heading into tomorrow, we do have a short setting up. So if we do start to break some of those support levels, we talked about 199 over on the daily chart. We do have a short setting up. At the moment, it looks like the short's going to come right around the 198.40 level. Okay, it may even push down a little bit further than that, but I will be looking out at some November put options if that trade does trigger in on the downside here over the next couple of days. So I'm looking at the short side there on SPY. On QQQ, we had a very similar situation. We had this long trade that did get taken out with a partial profit. So in one sense, we were fortunate enough to where we got to move high enough to reduce some risk and move that stop up. So in this market where we've been all over the place, the market can't make up its mind which way it wants to go. I felt fortunate that we were able to sneak out a little bit of profit out of that trade, and now we are flat. So the next step to get a short setup, we have to wait for our sentiment indicator down here to flip over the zero line. So we're going to need another day or two of selling in order for us to get a short setup. So we're going to have to be patient here, and I don't mind that, knowing what's coming with the earnings releases. I don't mind staying flat until the market kind of shows its hand a little bit more than what it has here lately. So we're currently flat on QQQ. Let's take a look at Amazon. This was also a trade that we talked about in the weekend recap. This was another one where we didn't quite hit our full target. We came very, very close. We got 99% of the way to the full target. So the way that we teach our students here, we want to use smart money management. When we get 99% of the way to our second target here, that second series of blue dots, I'm not going to let this one turn all the way back around on me and give up all that profit. So we gave it a little bit of room to breathe here, a little bit of room to pull back, and that's where we were taking out. We were taking out with a partial profit. So again, was it the home run trade that we wanted to see? No, but it was just a solid small winner. Keeps producing those winners, over time, and we'll be fine in the long run. So now we're flat. We do have earnings coming out here on the 22nd. So again, we're running right up against that deadline. I really don't want to carry any positions through the earnings releases. So, if we have to stay flat here on Amazon, I'm more than willing to do that. Google was another one that we got wiggled out of here today. This was the long setup that we talked about over the weekend as well. We got about $2 from that full target. Our full target was up at $6.92. We got up to $6.90, and that's where price action stalled out. So we got taken out at our trailing stop here. You can see that we were trailing our signal line. That's where we got taken out of our long call spread today. So again, another partial profit. So would I love to come in here and show you, full profit after full profit? Absolutely. But realistically, I'm trying to show you guys the same names in every video because this is my watch list. I don't change names on a daily basis. You're going to see me cover the same names over time. So this is real trading here. We're not going to always hit full winners. We're going to have losers. We're going to have partial winners. That's just trading. So, we are flat on Google. We do have earnings coming out here as well. So we'll want to be cautious there. We want to make sure that we are flat in front of the earnings coming out towards the end of the month on Google. Netflix. Here's the way that I played Netflix. Let's go ahead and zoom into the chart here. So we had this long setup. Here was another one that got 99% of the way to the full target. We talked about this in the weekend video. We're not going to let this turn all the way back on us and get rid of, and give up all that profit. So we did book our partial winner here as well. And then this short setup that looked like it triggered in today, I mentioned this to our followers on Twitter. We did not take this setup. I don't want to take a trade on the day of earnings. So we wanted to stay flat with the earnings out after the close. So we are not in this trade, and now we're going to pick things back up over the next couple days. Now that the earnings are out of the way, we can start to get back in sync and look for the next fresh setup, see if we can get back on board with the next fresh trade there on Netflix. Very similar approach on the financials. If we take a look at Citigroup here, the system looked like it was in a long trade, right? Looks like we have a new short setting up. We're not in those trades. We're not considering those trades because we know the earnings are out tomorrow. We wanted to stay flat. We don't want to get caught up in pre-earnings chop. If we have to sit on the sidelines a bit, we've been plenty active enough on the ETFs. So even though we're not in these trades, I don't want you to think that you have to sit out weeks at a time during earnings season. We have plenty of other names on our list that we can be active with. So we are currently flat on both Citigroup and Goldman Sachs. Let's take a look at symbol BA. This is Boeing. We had this long trade that we talked about over the weekend. We did get taken out of this trade at break even. So we did get a move high enough on Monday to hit that first target That allowed us to move the stop up to break even, and that's the level that we were taken out at. Now, we saw a pretty massive range here. Boeing is not one of those super volatile names that likes to make 5% moves intraday, but that's exactly what we saw today. The earnings aren't even out yet. I mean, the earnings are out on the 21st. We've got another week yet. So pretty unusual to see this, but we did get triggered into a short trade today. So we got taken out at break even on the long trade, no harm done, and then we triggered into a short. Okay, that one made some pretty quick progress. We don't typically trigger into trades and hit first target on the same day, but that's exactly what we saw today. I mean, we saw almost a 4.5% move to the downside today. So our stop is at 135.89. Our stop's at break even. We're looking for a full target move down to 131.39. So let's see if we can get some follow through to the downside here to end the week. That would be nice, and close out of that trade with a nice full profit. Let's take a look at Tesla. Tesla's been all over the board also. We did close out of a nice winner here late last week. We talked about that in the weekend recap video. We are in another short trade here. Okay, the system did trigger in short. We've got targets at 208.85 and 202.02. You can see that down here. And then the stop's up at 227.78. I will say this, in my own personal trading, what I am doing now that it's expiration week, the October monthly options are expiring, I am going out, and on most new trades that I'm taking, I'm going out to the November monthly options. Okay, I'm not going to mess with the weekly options. In most cases, when I go in and look at these weekly cycles on some of these names, the liquidity just is not there. And you have to be cautious of that. I know the weekly options are attractive because in many cases they're cheaper. But if you don't have the liquidity there, you're going to end up giving up too much to get in and out of the trade. You're not going to be able to get filled at good prices. So any advantage that you think you might be getting by trading the lower priced weekly options, you're probably going to give that up with any type of slippage or having to adjust the price on your trade. So I've been going out to the monthly options in November, even though, by trading those longer term options, I'm probably going to be left with smaller winners if the trades work out. Okay, I definitely think it's worth the trade-off there. I definitely think it's worth going out farther in time for the added liquidity. Okay. Let's go ahead and take a look. Let's go ahead and take a look at some of our reversal charts. So the reason I want to do this, many of you I know have signed up for our free version of this reversal setup. So we gave it to you on 3 of our favorite products. The fully customized calculator, is available. You can go ahead and sign up for that for no charge. So I'm going to cover some of those trades that are in progress. If you haven't had a chance to download the free version, feel free to send me an email, mike@netpicks.com, and I'll make sure you get that information. So the reason I want to cover this, one of the markets that we cover in the free version is the Dow ETF. Okay, so the other charts that I just showed you, we talked about SPY and QQQ. Those are the other U.S. market index ETFs that we track. We look at those on our basic charts. We have 3 setup types as part of our program. We have our basic setup, our re-entry trade, and this is our 3rd setup type. This is the reversal setup. Okay, so I trade the Dow ETF on the reversal chart. This setup is really designed for markets that tend to swing back and forth on a regular basis. Okay, so I have found that the Dow really, it does quite well with the reversal chart, and it's nice because this is not a super active setup. We don't get setups every day. We don't get setups every week. We're very picky on what makes a trade. So we're looking for market extremes. The reason I mentioned this over the past couple of videos, and I've been talking to my students about this to my students, after the move to the upside the last 8 to 10 days, there's no surprise that we are at an overbought reading. I mean, you can see the move to the upside here, right? So we got up above -10 on the Williams %R. Once that happens, as soon as price action starts to break our signal line here and head lower, notice that we did trigger into a short trade here. Okay, you had a couple of chances to catch this. This one triggered in this morning, and we did already hit first target. Okay, so our stop has been moved down to break even. Let me get the exact numbers here. So for those of you that are in the trade, let's go ahead and take a look at what should be done here. The short setup was at 170.18. That triggered in today. We actually talked about this one in our training room earlier in the session. So we triggered into a short trade. I personally went out into November and I bought the November 172 puts. Okay, we already hit first target, so our stop is now moved down to break even at 170.18. We're looking for a full target move, went down to 167.50. Okay, so far so good. We've got a nice profit on the trade. Now we need some follow through. But the nice part about this is, if we do flip back to the upside tomorrow, if the financials release some good earnings and we see a market rally, we've already reduced the risk on this trade. Okay, that's a great position to be in. And now let's see if we can let the market run a little bit and give us some nice profit. So we are in a short trade. 167.50 is the target. The stop is at 170.18. Google is another one that is on the list of the free symbols that we give you. So again, you're going to have access to all the customized indicators here. That way you can kind of get a feel for how the system trades. So we've got this short trade. We triggered into a short at 680.04. We've got targets down at 674.04 and 664.84. So we've got our work cut out for us. I mean, we're going to have to be patient here and wait to see if we can get some follow through on the downside. The way that I decided to play this one, I went ahead with the November 685, 665 put spread. And I got into that trade for just under $9 per spread. So about $900 per spread to put on that trade. So now I want to see some follow through to the downside. Okay, oftentimes with this reversal trade, the Dow example that I showed you where we're zooming right down to a first target, that's not typical. Okay, and a lot of times with the reversal setup, we get in early and we have to survive some choppiness or some pullback. So this pattern here on Google is not uncommon for the reversal setup. Now we need to start to see some of those key support levels broken and start to see if we can get a move to the downside. Okay, so that is Google. The last one here is Apple. Now, if you're trading Apple, you've got a decision to make because we do have earnings coming up here. So the system, we got taken out at break even there on the long trade. The system is in a short setup here with targets down at 108.32 and 106.84. The stop up at 112.52. The decision here is, do you want to sneak in another trade or do you want to stay flat with earnings coming out? I'm personally going to sneak in additional trades here because I know that some of these tech names can stay active right up until those earnings numbers come out. So I'm willing to roll the dice here a little bit, knowing that there is always a chance that we slow down and chop heading into a big earnings number that's out here in a couple of weeks. So the decision is going to be up to you. At the very least, if you're going to take the trade, reduce your position size. Maybe look at a put spread as opposed to a long put. Okay, so those are some of the things that you can do to try to protect some capital with so many unknowns here coming up over the next couple of weeks. Okay, so that is Apple. Those are the three names that you have access to with the free reversal system. The reversal system, the full version, it works on any symbol that you can think of. If we want to look at the bond ETF, this is TLT. Okay, we just got wiggled out of a trade here towards the end of last week with a partial profit. Okay, you can see that we did move the stop down to a trailing stop. So the system is designed to pick market extremes when we get overbought or oversold, and then we're looking for retracement. So it's one of my favorite setup types, especially when we get into a major market extreme, which I feel we're at right now. So take advantage of that. Again, if you have any questions on that, send me an email, mike@netpicks.com, and I'll get you set up here for the next couple of weeks. Oftentimes when you come out of earnings season, a lot of names are going to be left at overbought or oversold levels. So it's a prime time to take a look at this setup. So heading into the rest of the week, you can see the futures, as I was recording this video, you can see the futures here have been pretty active here during the overnight session. We're up about 36 points on the Dow, up about 5 points on the S&P, up about 19 on the NASDAQ. The Russell's up about 3. So heading into tomorrow, the bulls are not going to give it up easily, right? They're going to put up a fight. So expect a bounce. What's been interesting here, and let me wrap it up with this. If we take a look at some of the internals, so let me pull these up here and we'll talk about some of the internals. So I've talked about these in some of the previous training videos that I've done. These are the internal charts that I look at throughout the day to gauge how strong or weak the market is. It's not just enough to look at the overall index products. When you turn on CNBC and you hear them talk about the Dow down 100 points, that doesn't tell me enough. I want to know how weak the market really is. So when I take a look at the internals here today, Okay, look at where they closed at. Minus 1.12 to 1 negative on the NYSE. What that's telling me there, okay, it's taking a look at the ratio between the volume going into names that are positive on the session versus the volume that's going into names that are negative on the session. So on a day when we see a lot of weakness, if we see a big sell-off, I want to see this number at least at minus 2 to 1 negative. Okay, it was only at minus 1 to 1. Okay, so it really was not strong selling across the board. It was a pretty mixed market. If we take a look at the advanced decline line, okay, minus 516. Okay, that's telling me how many names are advancing on the session versus how many names are declining on the session. Okay, on a strong trending day, I want to see that number at a minimum. If we're seeing a strong trending day on the downside, I want to see that at least at minus 1,000. Okay, we weren't even close to that today. So that, again, that goes to show that it was not strong across the board selling today. It was a very, very mixed day. Okay, now on the tick reading, okay, this is again just more of an intraday indicator telling us how many stocks are trading on an uptick versus how many stocks are trading on a downtick at that given point in time. You know, basically we're looking for extremes here. We did get a plus 1,000 reading earlier in the session, and then this afternoon we did get a couple of selling extremes, at least intraday. We got 4 different readings right down near the minus 1,000 level. So we did start to weaken here in the afternoon, but again, nothing super extreme. Now here's what I'm talking about as far as price goes. If we take a look at the 5-minute chart of the S&P, now I've got some pivot points on here. I've got the VWAP, which is that blue line. That's the volume weighted average price. I talk about that on Twitter all day. Okay, so those of you that follow us on Twitter, you've heard me talk about this. I look at these key levels throughout the day to gauge, you know, how weak or how strong the market is. It's a really, really reliable chart for me. So I know that when we get extended away from VWAP, and I mentioned this morning on Twitter, I said, you know what? We've seen some selling pressure kick in here. We're a little extended from VWAP, so I expect a bounce. And we got that around lunch. We did test the VWAP. Now, ultimately this afternoon, we sold right back off and we headed lower. But once you start to get away from that VWAP, it tends to act as a magnet. It tends to try to pull price action back towards it. So you can always use that as a guide. Now, what we've seen here the last couple of days, notice the first 20 minutes to a half hour of the session, it was the opening bell rang and we saw a straight move to the upside. And we actually tested the pivot there at 200.81 before selling off. If I go back to yesterday's session, Tuesday's session, opening bell rang, we filled the gap, saw a pretty strong move to the upside before selling off. Okay, Monday session, you know, pretty choppy session because it was a Columbus Day holiday. The bond market was closed. Volumes are very low. But what's key about the last 2 days, when you start to see these markets open strong and you see buying early on, and then the market gives back all those gains and then some, it's important to point that out. That's oftentimes price action that you're going to see when the market turns, because everybody's just expecting people to come in and buy the dip. Every dip, and when that starts to change, when the market starts to sell off after the first half hour, that's very key. That is a red flag. So what I'm looking at here is when you start to turn on the news, you know, if you're busy at work all day and turn on the news here tonight and you see that, okay, the market got hit a little bit, turn on CNBC and they're probably making it out to be worse than it was. Look at these internals. Very, very mixed. We talked about the up volume versus down volume. We talked about the advanced decline line. We looked at the price action. Okay, there's red flags here. There's signals that the market looks like it wants to turn, but it wasn't nearly as bad as what you would think by just looking at the index numbers. Okay, if the Dow was down, you know, I don't even remember what it was finished down here. Down 157 points on the Dow. Okay, did that tell us the whole story? I really don't care what the number is. I'd rather look at the internals to see that, okay, we did close down on the session, but it wasn't as weak as the numbers indicate. And that's really why the futures are up here after hours. Okay, so we'll watch these internals closely. Let's see if the market decides to get weak here over the next couple of days. Again, close eye on the financials here tomorrow before the market opens, and let's see if we can book some more profits here before the end of the week. So it's been a really nice stretch for us over the past number of weeks. We've had some full winners, we've had some break-even trades, we've had some partial winners. It's been a nice profitable stretch for us. Hopefully you're starting to see the power in the way that we trade by looking at the same symbols. So those of you that have watched the previous videos, you should start to see that we look at the same symbols every single session. We do not change those. Our watch list remains the same, and that's what allows us to trade with confidence. So I'm going to go ahead and wrap this video up here. I'll be back here over the weekend, take a look at how we wrapped up the week, and kind of get a plan of attack for early next week. So if you have any questions, feel free to contact me. I gave you my email earlier, mike@netpicks.com, and we'll talk to you guys over the weekend.